Hi, hi viewers. So, this is our first sum. Let's solve March 2025 reframed sum of final accounts. Okay. So here the question is prepare the final accounts of Gautam Traders for the year ending 31st December 2018. So the year is ending here on 31st December 2018. You are provided with the following trial balance. Okay, we have all trial balance amounts and particulars over here and adjustments. So the best practice that I always suggest you people to do is try to identify the adjustments first. Try to identify the adjustment first, and in the trial balance, if there is an adjustment for a particular thing, just put a dot or tick mark over there, so that while solving the sum, if there is an adjustment for one item, we'll put that item and we will put the amount, and we'll leave some space because there is an adjustment for that item. So always try to identify the adjustments first and put the dot. In this problem, first thing that you need to see, first adjustment that you need to find is either purchase or sales. If it have purchase returns or sales returns, so it would be in trial balance only. Okay, so in the trial balance we have purchase, and purchase return is also there, so put a dot beside purchase so that we'll leave some space for the adjustment. And next, for sale also we have sale return, put a dot for sales as well. And next, closing stock. For closing stock we'll put it in trading account and balance sheet. No need of adjustment, space is required, no need. So unpaid wages, so we have unpaid wages in the adjustment, put a dot beside wages so that we'll leave some space. Interest received in advance, put a dot, interest beside interest. We have interest debit and credit, I'll explain you what is that. As of now, putting a dot beside interest in the credit side. Commission received, put a dot at commission so that we leave some space. Okay. Okay, so now let's start solving the sum quickly. First item in trial balance, opening stock. Opening stock, I'm so sorry. We'll first put the heading for this proformas. Okay, for this it would be trading and P&L account of Gautam Traders, right? Gautam Traders for the year ending, for the year ending, what is the year ending? 31st December 2018. So trading and profit and loss account of Gautam Traders for the year ending this year. Okay, we need to put the, we can follow this pattern, that is good. Okay, next, in the same way, balance sheet of Gautam Traders for the year ending, for the year ending 31st December 2018. Okay, please don't mind my handwriting. Trading and profit and loss account of Gautam Traders for the year ending 31st December 2018. Balance sheet of Gautam Traders for the year ending 31st December 2018. Okay, we'll make sure that we put headings for both proformas and we'll start solving the sum. Let's quickly start solving the sum. Opening stock will be always on the debit side of trial balance. Opening stock will be debit side of trading account. Okay, 7,000, and it will be 2 opening stock. Okay, always put 2 in the beginnings, buy in the beginnings, as I explained you. Next, purchases. 2 purchases. So we have adjustment for purchase. We'll better write it in inner column. Okay, 9,000. Just write the amounts in inner column. We'll do an adjustment, and the final amount we'll put it in outer column, just to present it neatly and without any confusions while calculating. Next, rent. Rent always will be of 2 types. Either it may be factory rent or office rent. Factory rent will go to trading account, and office rent will go to profit and loss account. So when they say rent, then should consider it as office only. If that is factory, then they will particularly mention it is a factory, warehouse, something like that. If they are not mentioning anything like that, they simply said rent, then directly P&L account. Okay, we'll put P&L account from here. P&L. Okay, to rent. To rent. How much is that? 1,200. Next, salaries. So we'll pay salaries in office. Salaries, P&L debit side, 1,500. Next, wages. Wages we pay in fact to wages. Okay, wages also we have adjustment. Okay, just a second. So for purchases we have adjustment. We will leave some space. To wages, to wages, that is 1,000. 1,000. And next thing, carriage on purchase. So carriage on purchase, while purchasing raw material, carriage that goes to trading account, and carriage on sales will come to profit and loss account. Carriage on purchase can also be called it as carriage inwards. Carriage on sales can also be called as carriage outwards. He may ask in that way also. Carriage inwards is nothing but trading. Carriage outwards is nothing but profit and loss item. Okay, just be mindful of these wordings. He will confuse you like this. To carriage on purchases, 1,000. To carriage on sales, to carriage on sales, 450. Land and buildings. Okay, land and buildings is asset, so we'll go to asset side. Land and no to, no buy here. Okay, we will not put any twos and buys. I'll repeat these things so that you will remember. Investments. Next, investments is also an asset. Investments, 20,000. 20,000. Next item, loose tools. Loose tools is also an asset. You know, right? Tools. 12,000. Discount. So whenever these terms discount, interest, so if these discount interest are on the debit side, then we should consider it as we have given discount, we have given interest. If the same things are on the credit side of trial balance, then that is our income. Whatever the items that are on the debit side, those are our expenses. Whatever the items that are on the credit side of trial balance, those are our incomes. So here discount and interest is on debit side, so it's expense for us. Means we are paying discount, we are giving discount, we are paying the interest. Okay, and this directly comes in the P&L debit side. Okay, to discount to interest. How much is that? 1,500. 500. Next, telephone charges will be the office expense, so that would be P&L debit side. To telephone charges are 700. Okay, printing and stationery will be office. To printing and stationery, how much is that? 900. Next one, furniture is an asset in the balance sheet. 18,000. Sales returns, so sales returns we will deduct it from sales. Okay, that's last item. So to deduct it from sales, what is the sales? We'll write sales first in the trading account. Buy sales, how much is sales? 16,000. We are writing all the adjustment items inside, so that we'll do the adjustment here and we'll put final amount in the outer column. Okay, buy sales less sales returns. How much we got written? 200. So in the outer column, 16,000 minus 2,000 is 15,800. Okay, we are just deducting because we have some sale returns. Next, the credit side items will go through the trial balance credit side items. First item is capital. Capital is always a liability. Okay, why capital is liability? Because in accounting concepts we always treat owner is different and business is different, both is not same. So for business, the investment that owner kept is a liability, because owner is liable to pay back the amount to the owner. Business is liable to pay back the amount to the owner. So that's how we treat. Owner is different, business is different, so that's why we treat it as liability for the business. So capital capital we'll put in a column only, because we'll get net profit or net loss brought down here, so that would be always an adjustment item. So interest is in credit side, so if it is in credit side, then that is our income. So income in the profit and loss. Interest, buy interest. Interest 1,500. Okay, next, purchase returns. So where is purchase here? How much purchase returns? 500. We're deducting 500 from 9,000, that is 8,500. Next, sales we already recorded. Commission is also again on the credit side, so that is our income. So we'll write as income by commission. How much? 1,000. Commission. Okay, chalo. Next, creditors are nothing but the persons to whom we need to pay the amount. Okay, we would have brought some raw material or some other things on credit basis. So we are liable to pay them. We took something, we are liable to pay for the things that we took. Debtors are nothing but the persons who should make make the payment to us. We have provided some service or goods, they are liable to pay us, so we are going to get the income in future. So that we treat it as asset. Debtors we treat it as asset. Creditors we treat it as liability because we are liable to pay. So now we have creditors, so that is liability. Creditors 6,000. 6,000. Okay. Chalo. Now let's go to adjustments very quickly. You are required to incorporate the following adjustments while preparing the final accounts. Okay. Closing stock. Always remember adjustments will have dual effect. That what I mean is, like we are going to record two times one adjustment. Uh, Two times in the sense two accounts. Adjustment will definitely have two accounts to be recorded. Okay. Two effects it would be. Closing stock. So closing stock will be always on the credit side of trading account. Okay. By closing stock. What is the amount? 12,000. Always remember there would be two effects for the adjustment. One effect is here and the other effect, closing stock is always asset for the company because the closing stock is going to be an opening stock for next year and they are going to sell the closing stock, right? So that's why it is an asset. Still we can sell and get money from there. So it is an asset. This is the second effect. Closing stock 12,000. Okay. And second adjustment, unpaid wages are 500. So where are wages? Here. So and just add unpaid wages. And unpaid wages, how much? 500. And total wages are 1,500 in outer column. Okay. Unpaid wages. We have wages, but we have more unpaid wages as well. So we are going to add. So here it is one effect, and other effect would be on the liability because that is unpaid. We need to pay. If we need to pay, that is liability. If we need to get, that is asset. So unpaid wages would be liability for the company. Unpaid wages. Unpaid wages 500, and it can also be asked as outstanding wages. Okay, outstanding, unpaid, everything is same, just the terminology change. Interest received in advance 600. Okay, so again the third adjustment, interest received in advance, total 600. Okay, so received is nothing but interest received is nothing but it's our income, right? In the in the adjustment itself it said received. Paid is nothing but we paid. Interest is nothing but we received. Okay, received is nothing but we received. Paid is nothing but we paid. So here it clearly says interest received. So what interest, if we receive interest, it would be PNL credit side. So in advance we received it, so that is, I think we forgot to put it in a column. Okay, 1500, right? Less received in advance. Received in advance. How much we received in advance? 600. 600. So in the outer column 900. So if we receive something in advance, so that is liability for us. Okay, second effect will be interest received in advance. How much? 600. Okay, and the last adjustment, commission received, is 400. Okay, we already received commission, again we received commission. How much? 400. Then we will put it in a column. Already we have received 1000. Add commission received again, commission received again, that is 400, and total 1400 in the outer column. Okay, I think all the and all the items are clear, I think. So now we are done with posting all the items into the proforma. Now let's do the balancing. Okay, for doing balancing we need a calculator, which is allowed in exam. Let me quickly grab my calculator. Okay, so by seeing this we can easily identify like 8, 15, 16, 17,000. Here 15 plus 12, more than 17. So obviously credit side is more. We'll just do 15,800, 12,000 is 27,800. Okay, we are going to calculate all the amounts in the debit and credit. Whichever the amount is high, we are going to put it as a balancing figure. 27,800. In this case, credit is more, 27,800. So how much it is more? We'll put it here as 2 gross profit. Okay, let's deduct this amount. 7,000, 8,500, 1,500, 50, 9,750. 2 gross profit carry down, 9,750. Okay, so if the credit balance is more, then we'll get gross profit. If the debit balance is more, we'll get the gross loss. Do not forget to put twos and buys. Okay, 2 gross profit carried down. Carry down is important. Okay, now this carry down will become brought down. Okay, this debit aspect will become credit aspect over here, brought down. Okay, here by, it would be by gross profit brought down. Here it would be brought down, there it was carried down. And how much is the amount? 9,750. Okay, now let's do the balancing figure for P&L. So trading account is done. We kept the balancing figure. We found gross profit. We transfer that gross profit to P&L account, that on the credit side. Now if we do balances on the both sides, again 9,750, 1,400, 900, and that is 12. I'm just writing it roughly over here, and I'm doing debit totals as well. 1,200, 1,500, 450, 1,500, 500, 700, 900, 6,750. The total here is 6,750. So obviously credit side is more. So credit side 12,050 will be the balancing figure. 12,050. 12,050. 50 will be balancing figure. So from this balancing figure, we will deduct the debit balance. That would be 5,300. Okay, 5,300, and that will become to net profit. Profit carried down, because we are carrying it down, right? Carried down. Here it is gross, here it is net. On the debit side, it would be profit. If we get the amount on credit side, it would be loss. So again, this net profit will be adding to capital. We are moving this balance from P&L to balance sheet. Chalo, let's do it. 5,300 here. If it is net profit, we'll add. If it is net loss, we will subtract from the capital. If it is loss, then the capital balance of the owner will decrease, obviously. So we are adding net profit, down, and 5,300. Let me write it clearly. 5,300. In the outer column, 1 lakh, 5,300. Okay, we got the balance. Now let's do the total amount of all assets and liabilities. Both the balances should match. Then we are done with our sum. If it is not matching, then again we need to revisit the sum where it went wrong. 1,12,400. 1,12,400. What is the assets total? Thousands plus 20,000 plus 12,000 plus 18,000 plus 12,000. 1,12,000. We are getting. Where we missed that 400. Yeah. So commission received. So the second effect we didn't put anywhere. So commission received, first effect is adding to commission, and second effect is commission received is 400. Okay, now the balance is matching and we are done with our sum. Okay, yeah. So this is how we do the final accounts: trading, profit and loss account, and balance sheet. So this is pretty much the sum, and it's very easy if you understand, and it would be very tough if you confuse. There are small aspects that confuse you, like rent, interest, commission. If it is on the credit side, then that is income. If it is on debit side, that is our expense. So these things, if we remember, we would be good with the sum. Okay, I think this video helps you a lot, and we are able to complete the first sum. More 5 sums to go. We'll meet in the next second sum. That is, I think, uh, June 2025 sum. Okay, chalo, thank you, bye.